Everybody, it's Hussein Kabani, your favorite broker. We're doing things a little bit differently today. Usually on a podcast, I have one person, but we've tried to make things interesting. We've got two people. We got Jason Vanular, and we've got Varan, our mortgage broker. And we're going to try to go through a few topics and just get people's opinions on what's going on. Thanks for being here, guys.
And thanks for having us.
Yep. So I just want to kind of recap a little bit because we're at the end of 2024. The real estate market did start off a little bit crazy because we ended 2023 in a kind of a weird way, in my opinion, because the fall market in 23 was like very slow. And then halfway through December, it really picked up, saw that momentum into January, into February, and halfway through March, it kind of dropped off where I was expecting a spring market and it just didn't kind of came back. So it's been a different kind of a market. What did you guys make of it? Like, what was your expectations kind of from 23 going into 24 and how did that stack up?
I can start. I mean, I knew it would be a slower market with volume, which we saw, right? Things, numbers were down, house prices were down. From my practice perspective, things, weren't closing on time. There's lots of extensions.
Still,
people are having trouble getting mortgages. New builds were the hardest. Like people that bought new builds peak market, like 2-3 years ago, are now closing. Appraisals were coming in 10-20% short on average, I'd say. So they have to find the money, find the shortfall. And that's been pain in my existence for the last quarter. A lot of new builds are closing this quarter.
Wow.
And a lot of people don't have the difference in funds.
Really?
So now builders are starting to realize, I think, okay, I can note them in default, take their deposits, but then I'm suing someone which may not have a lot of assets at the end of the day. So people are scrambling to find second mortgages, bring parents on title, try to get vendor take-back mortgages from builders, just get creative to try to close and, fulfill their obligations.
So in that respect, are builders starting to be a little bit more flexible?
They are. I'm seeing more reasonableness coming into play now. They're realizing, like, if I don't do something here, then I'm going to have to note them in default, sell for a loss, and sue someone with maybe not a lot of assets who may claim bankruptcy. Yeah. So the end game, everyone's looking at this saying, well, we realize the market's down. And I think vendors are starting to realize that as well. They have to work with these buyers. So I'm seeing more reasonableness coming into play. But sometimes you get a tough builder and they say, no, price is the price. Take it or leave it. And that does happen as well. Some builders are just suing people.
So you really seen the problem in new construction. How about in like resale? Have you seen so much of that?
Because I know resale's been okay. Most people pre-qualify. Yeah. Obviously if they have like a good mortgage broker like Varan that does a pre-approval, or like a good agent that tells them, do a condition, because you can negotiate conditions in this market now. So people are doing that. Yeah.
It's not so much there.
Yeah. So I don't see as much in resales, but I'm not seeing luxury house sales flying off the market like they used to. Like most of my deals are 1.5 million price and below now. Right? You don't see too many 2 million plus deals. Yep.
So that's actually a good point, because my business this year has kind of been the same. Like last year I had some really cool high price points, and this year it's been kind of like that 900 to 1.3-ish kind of thing. Yeah.
But keep in mind, $2 million house become a $1.5 million house anyway.
True. So it's the same product. It's just cheaper. It's just discounted at this point.
No, exactly. Now you're buying 3 million houses for 2.5 too. So that's a good point.
Sure. Yeah. What do you think, Varan? How do you like? What did you expect in 23 going into 24, and how did it play out based on your expectation?
So you nailed it. It's pretty much come down to, it started pretty strong. Yeah. And it's died down, and it's picked back again with the rate cuts last couple of months. Yeah. Same challenges as what Jason said. Closing the deals out of pre-construction. Yeah. Not because the clients are qualified, because of the value. Right. We talked about in the previous podcast, like $400,000-$500,000 less than the purchase price.
So what are you seeing some of your clients do at this point? Like, have you been able to come up with solutions for your clients? Like, how are they trying to close these deals? Because I'm pretty sure nobody, like you said, wants to be in default. And if they had the means of kind of liquidating something, I'm pretty sure they would want to, I would hope they would want to do it on their part versus having the builder force their hand and doing it after being in default.
There are solutions, but those are not cheap solutions. Those are very expensive solutions. Right. You need to go and take a second mortgage, or you need to take a private mortgage on both properties. The one I was able to close, they need a blanket principal home and the new property, and they need to borrow at almost 11%.
Wow. What do you mean by blanket both?
Appraisal came in $500,000 less, or $450,000 less. So they couldn't come up with an extra down payment. So they have equity built on the previous home, the current home, the principal home they own. So the lender wanted to blanket both of them to bring the loan to value below 75%.
Wow.
I've done a bunch of those as well.
Really, eh?
Clients,
blankets, yeah.
So that's how they're closing these deals at this point.
At 11%. And keep in mind, the payment's almost $15,000.
Wow, that is incredible. especially on a rental property where this year I've seen the rental prices kind of come down again.
Yep.
Like they're like we are lowering prices on rental properties right now.
Mm-hmm.
Like, and even like I was telling you guys before, like getting qualified tenants, like that's another whole issue at the same time.
And the condos too, right? The condos in downtown having a biggest challenge. Right?
Oh yes.
Yeah. Like I think this, I just checked this morning, we got 20% more inventory in condos than we did this time last year as well.
Yeah.
And the sales are very sluggish.
Up. Yep.
Yeah.
Can't carry them anymore, right?
No, it probably doesn't make sense anymore to carry them, right? Like how much loss can you take on it possibly?
And they waited for they thought the rates are going to come down, the market's going to pick back again.
Yeah. This being said about 24, like what are you guys seeing in 25?
For me, I mean, deal volume seems to be picking up. I had a pretty busy December, and it seems to be a little bit more confidence in the market. Yep. Maybe that's because the interest rates have come down a bit and people are getting off the sidelines. Maybe they're thinking mentally, oh, the market's going to be a little hotter now and I might get less deals.
Yeah.
So I think some of those people that were waiting on the sidelines are going to, start to enter the market. Probably first-time buyers.
Yep.
Probably people, I think, downsizing.
Yep.
Elderly people that have been kind of holding on to make sure there's a market there to sell. People that entered mortgages in 2020, he can tell you that we're at 2.5%, 2%, and they're paying, above market prices where we are now for houses. Those are all coming for renewal this year.
Yes.
2025. So you're going to see a lot of people being like, man, my payments have almost doubled.
Yes.
Even though rates are coming down.
Exactly. And the appraisals are down, so they might be underwater. And so now they're like, okay, what do I do?
Yeah.
Do I buy a smaller house, downsize, take my money out, take the stress out of my life?
Yeah.
Do I refi at a higher rate, just kind of wait it out?
Yeah.
So I think you'll see some more distress sales. I think you'll see people downsizing into smaller houses, taking their money off the table just to avoid that financial stress.
Because we were talking about this like back when the rates were starting to go up and then talking about renewals. This was like 18 months or 2 years ago. And we were expecting, I don't think I was expecting, but there was a lot of talk in the market about saying, oh, there's going to be tons of delinquencies and stuff like that. We never really saw that. Do you think that's because a lot of the people had the 5-year and now these are really starting to come up and that could become more of an issue now?
Yeah, I'm seeing more distress sales and power sales
You're
coming
seeing that
across
now?
my desk. Yeah, way more
Especially
frequent.
the privates, right?
Privates for sure. And people now maxed out their equity with seconds and sometimes thirds, and now they're underwater, right? And they're all coming for renewals.
So just out of curiosity, like have these guys tried to do something before they get into the situation, like try to sell? I find sometimes in my situation, I haven't been in a ton of these situations, but sometimes I find that people just try to hold on. And even when they have an exit point, like they're just like, well, I'm going to take too much of a loss. I don't want to do this right now. But when they push come to shove and their hand is forced in it, they actually end up losing a lot more at that time.
Yeah, I think unfortunately there's people that want to lose their houses, so they try to stay in them as long as they can, make it work, borrow from whoever. But yeah, I think it's sort of coming to a head now. I see a lot of people like first and second mortgages that are pretty high loan to value ratios, and you probably see it too. Like before, it might have been 85 to 90% lenders were lending at up to the second. And now with appraisals coming back in, the second lender's like, I want out. Like this thing's appraising at 80%. I'm already taking a haircut. So now you can't find replacement mortgages. Yeah. Right. So they're kind of forced to sell or they get put into default.
Right. So you have to think about this up front right now.
That kind of buffer of 15% value they had is gone. The market went down 15% or 20%.
True. So
I think the Canadians will do anything and everything to keep the houses.
Mm-hmm. Yeah, that's what it feels like.
I actually ran into an example. House bought for $2 million, listed for 1.5. It was at power of sale.
Wow.
They end up canceling the transaction. The buyer took over the mortgage, or someone took over the mortgage.
Someone took over the mortgage.
Like what are the chances of? So they really don't want to let things go.
Yeah.
Mm-hmm.
Even though value's not there, even it's on a power of sale.
It's a pride thing.
It's a pride
status.
status.
And they'll keep paying interest to have a roof over their house, not renting. And sometimes I look them in the face and say, you shouldn't sign the second mortgage. It's too high. You're taking $40K in fees off the table every year in renewals. Yeah. Eating your equity up. Like, what are you doing?
It just logically doesn't make sense.
It doesn't make sense, but people want that roof over their house. It's the Canadian dream, and they want to keep going. Like I had a deal hit my desk the other day, referred from a family law firm, and there was 3 mortgages, a writ, and another writ from a power sale on their other property they were supposed to sell and couldn't. So they're $600,000 short. We can't close this. There's nothing we can do to help you here.
That's it. You're done at that point.
It's over.
So people that are going to face these renewals, they really need to check themselves early and figure out what their solutions are.
Yeah, negotiate early. Yeah. Don't leave it till the last minute. He can tell you, if you got to find creative solutions, you can't be doing it not even 30 days before closing. No. You should be at this 2 months. At least. Right?
I was told a client walked into the office last week, actually on Monday. He has the first mortgage with Home Trust, B lender, private. It's coming up for renewal. They are not renewing it. Then I walked through it. He has 5 bedrooms, upstairs, or 4 bedrooms. Each bedroom is rented. Mm-hmm. He's living in 1 bedroom with 3 children.
Wow.
And the basement is rented. Wow. I looked at him. I'm like, dude, do you really need this?
Time to sell.
What is the point? Yeah. Honestly,
he's like, help me out. I'm like, yeah, my best advice is sell the house.
Yeah.
Yeah, that only makes sense. So we talked about 2025 where we could see a lot of these, or increase in actually defaults, right? What else do you guys see? Like, do you think that it seems like the market is starting to pick up? Do you think this will offset it? Because we've seen this already happen,
it's
right?
Opportunities for buyers.
Yeah.
Distressed sale means opportunities. So there's a lot of first-time buyers waiting on the sidelines, I think.
They will step in.
They'll step in.
It almost feels...
And immigration keeps rocking in Canada. Correct. Lots of people need places to live.
Yep.
GTA is a popular place to live, so that's also going to create buyer opportunities.
Yeah, it almost seems like to me that our market seems like we're kind of evening out. Like so far, if I look at 23 versus 24 up until like end of November kind of thing, it seems like we're kind of evening out. The sales price overall throughout the GTA are slightly higher. Nothing to brag about, but slightly higher. Sales are about par. We might be slightly higher, a couple thousand units higher than we were last year. So it seems like we're kind of improving a little bit. But I think that what I feel like is like the defaults that we might see might just get absorbed into the market if people are a little bit ahead of making these decisions. Do you know what I mean? Because I think there will be space in the market for him to be absorbed. Because we've seen this happen already where I've had a deal of my own where a guy had an investment property and he was kind of down and couldn't get the mortgage anymore or whatever. But the market was kind of at a certain point based on where he purchased, where he was able to just kind of get out of it and maybe walk away with a little bit of money versus running the course of trying to renew it.
I think average transaction in TREB is 90,000.
Yeah.
I think this year we are about 68,000.
So far, we're going to be around 68, maybe 70,000.
Probably finish at 70. I think last year was about 65.
Yeah.
I think we will be closer to average this year, about 90,000.
I think they predicted 6% increase Korea, right?
Yeah.
I believe.
Yeah.
So it's going to be a better market, but I think it's going to be a balanced market. The prices aren't going to go up.
Correct. Yeah. Like I was even looking at it and I think like maybe we might see 3-4% increase. Like as long as nothing goes sideways, I think 3-4% increase and a little bit more transactions.
Which is going to be better than 2024.
So we're kind of feeling the same thing. Like it should be pretty stable kind of market, nothing too crazy. I don't think that we're going to get into like crazy multiple offers. I think some spark up here and there, but like nothing crazy.
Yeah. I think the right house will generate interest.
For sure.
And I think that 1.4 and below house will be popular.
Yes.
And also with the new changes coming up on
on the mortgage 15th.
side. Yeah. Which is basically you can
buy up to 1.5
on insured mortgage.
On insured mortgages.
Yeah. And get the 30-year amortization. Yeah. So that's going to help.
Stress test rules are changing as well.
Yeah.
Hopefully.
Yeah. So hopefully it doesn't encourage people to spend too much more than they should.
Well, they shouldn't, but I think
that's always what I see.
It's going to create demand in that price point. I think you're still going to see 2 million plus houses kind of a harder sell.
Yeah.
But those kind of houses, a nice house, like 4 bedroom, 3 bath, decent square footage in a nice area, that's going to attract buyers.
Yeah, it's going to start moving a little bit better.
And I think the other thing we have to keep in mind is unemployment.
Yeah, that's true. That's a good factor because we're slightly higher right now. What do they say? 7-year high in terms of unemployment right now?
7.6%.
Yeah. So that's going to be interesting. Well, the interest rate still, I mean, today was an announcement. We went down 50 basis points.
Yeah.
Do you see that continuing?
I think it's going to be continuing, especially. And the other thing we have to keep in mind, the dollar is getting weaker as well. Right?
Very weak. Yeah. The US dollar is creating some havoc on us.
A lot of things going on.
Yeah. But overall, we still feel like it's going to be a steady market moving forward.
I think what's going to happen is there's a lot of sellers in the market, but they didn't have enough buyers. I think because the rates are coming down,
you see the buyers come back up.
Buyers will, at least the investors will step in to take these properties. Whoever see the opportunity on it.
And I don't want to get too far into it, but like I mean, obviously we have a election on the going to be happening in 2025. Like, do you guys see that affecting the market in any kind of way, positive, negative, or you think that's just not going to really affect the housing market? Depends what happens
with the U.S. market. I think we always kind of trail behind them, unfortunately, and see what Trump does for the U.S. and the economy. And I think that we kind of always kind of trail behind them. Our economy's always kind of lagged.
Yeah.
We only know that in spring because he's taking the office in January. So,
so you're going to have an indication kind of in spring of how things are going to go based on that.
They put embargoes on Canada, like they're saying, could affect our economy's GDP, right? So
for sure.
We'll see where it goes.
So there are some wild cards, but overall it seems like everything's going to be pretty steady. Next thing I wanted to kind of talk to you guys about even briefly is like, I've been reading about like income verification. CRA, Varan actually did forward me a questionnaire, which is basically CRA looking for input on income verification for mortgages. I thought it was a pretty good idea. I know that UK does it, US does it. Equifax is looking at doing similar kind of programs in India and Australia. I pulled a couple of stats here I'll share with you guys. So basically they said mortgage fraud rates in Canada have increased 52% since 2013. And if you looked at Q4 in 22 versus 23, they saw almost a 10% increase in fraud. I just do want to point out one other thing also is that when I first started thinking about mortgage fraud, I was just thinking people making up fake employments to like get into the houses, but there's also identity fraud, title fraud. There are different kinds of mortgage fraud as well. What is your guys' opinion on setting up a system so lenders can and should check maybe against just line 150, a quick bing into CRA and check line 150 and validate that's what it's coming through as?
I'll let Varan take the lead on that one.
It's a very sensitive topic.
Yeah.
It will, if you argue with someone, they'll say it will crash the market.
Right.
We know there's a lot of things happening in the market, especially in the GTA.
Yeah.
This is one of the driver for the house prices.
Yes.
So in my honest opinion, I think it will drop if that being implemented by the CR, by the government, it will impact on the house prices.
Correct.
Because there's a lot of buyers will be taken out.
Okay.
But isn't going to be a very level playing field for a lot of people who's trying to get into the housing market.
Makes sense.
Right. My biggest challenge is affordability. Like I'm seeing on the other end, people have got the mortgages not in the right way. They are struggling to keep up the payment. The banks call it fraud for shelter. Mm-hmm. So it's not malicious.
They've made a term for it.
Yeah. It's not a title fraud to scoop the money out. It's a fraud for shelter. They want to have a roof on the head. Mm-hmm. They just verify
made it sound pretty
qualified. That is concerning if you think about it. If someone have got into the housing market in 2022 at 2% mortgage rate, if we have to do a fraudulent get the mortgage at 2%, and now the same mortgage is going to come up for renewal at 4%.
Yeah.
Mm-hmm. Can you keep up the payment?
Mm-hmm. Yeah.
And that's also could negatively impact by getting the houses up in the market because affordability is going to be an issue.
Yeah.
Yeah, I mean, fraud's rampant. Like, I don't see it. Luckily, in my practice, we have a lot of good controls, but law societies change the rules for us for income verification, where the money's coming from. You know, we're kind of like quasi investigators at this point, and they want us to, it's like his FinTrack requirements. I have to ask a client where'd the funds come from. If I feel it's fishy, I have to dig behind it. They have to fill out a form to say, okay, it came from here, here, and here. But I'm not a qualified forensic investigator. Like half the time they tell me it came from my savings account, then that's good enough for me. I'm not going to go ask them for their bank records.
True.
This is things that I hope the banks are doing behind the scenes to verify that down payment amount. But, you know, if someone brings in a check from someone else, issued on someone else's name, I have to ask questions, right? So I think that's good. I think from a fraud side, it's important in real estate. We're ultimately the people who protect people's titles.
Yeah.
That and title insurance.
Yeah.
But yeah, no, and you're probably hearing it in the news. There's a lot of title fraud too these days. You know, I had a crazy story of a guy sat at a conference with he caught it in the act. It was in the paper, but people left the house. They had cleaners that were going in. Cleaners took some IDs and basically signed up a real estate agent, had access to the house, obviously had the keys, sold the house.
Wow.
They found someone as an actor that looked very close in identity to the IDs. And the neighbors basically called the people that were in China over the winter, called them and said, people are moving into your house. What's going on? They said, I didn't sell my house. Cops got involved. Luckily, they busted the fraud before the lawyer released the funds to the fraudsters. Oh, nice. And because he had a fishy feeling himself, and I think he said he even did a drive-by and just to make sure they were living there, and his guard was up. Yeah. But yeah, he foiled the fraud and they got arrested.
Wow.
But you can see the lengths people are going to these days, and I'm sure it's the same way in the mortgage side. It's sophisticated frauds. People are getting smarter. On the law side, like if you have like clerks out of office, like remote clerks, that are using their own email addresses. Like I don't do that, but some firms do. They do like contract clerks. Their emails are getting hacked. That hacked person then goes in, replicates that person's signature. Oh, I'm so-and-so from so-and-so's law firm. It's the same name with like a .com instead of .ca. Yeah. Oh, here's your closing fund summary. They're very sophisticated. They know all the lawyer documents. They know what to tell them. Here's where you wire the money to my trust account. And then the old person at the other end, they don't know. They wire the money. Money's gone. So, title insurance claims are through the roof.
Wow.
And they're seeing a big uptick in fraud, and they're luckily they're giving us CPDs on how to manage it, and but their claims are through the roof. Premiums are going up, so it's affecting the whole real estate industry. Costs on files.
I mean, like, just even like with the income verification, that wouldn't stop that in that sense, right? Like that's
just proof funds. Two different things. Proof just funds came from a valid source. They're not stolen funds. They're not being washed through your trust account. There's a lot of like check kiting fraud, people writing bad checks, things like that. So, but that's where it kind of solves that issue.
Yeah.
AML is a big thing too now, right?
Yeah.
With a couple of major banks, one of the major banks being fined big. So even for us, the down payment is a big thing. As
down
much as
payment,
income, they want to know the source of the down payment.
Yeah. Mm-hmm. Okay. But you were also mentioning that there is like something in the banking, like there is a tool available if people did use it or some kind of like to do like an income verification.
So there's a third party company. It used to be called as NOA today. I don't know what they call right now. You can verify that you can get the NOA.
So it could be done.
It could be done.
It could be done. Okay.
It could be done.
All right. I don't know. I'll just give you my 2 cents on it. Like, I don't know. Like, people may not like it, but I think that it should be verified. Because I'm looking at, can it affect the real estate market in terms of sales? I think so. I mean, based on the numbers that Equifax puts out of how much fraud is out there, I'm for it. Like, I think your income should be verified. And you shouldn't be buying properties, to your point as well, Varan, of like people buying properties and they can't actually afford to keep them. And then you go down this thing. And I think you're minimizing the chances for people that can qualify to actually buy these properties. And our property prices are pretty wild as they are right now. You know what I mean? And so like, where is it going to stop? If fraud continues, if a lot of fraud still continues, I think we're going to continue to see this like runaway train on price. And I think in the long run, we're going to be in for a lot more pain if we don't fix it kind of right now. That
is the reason we are actually having a pot of sales right now. If people are taking a second mortgage to keep up the first mortgage.
Correct.
Mm-hmm.
Yes. Happen because you cannot afford it.
Yeah.
Not all the time. There are some people go through life-changing events and health issues and death in the family.
Yeah.
That's a different thing. But to the most part.
Yeah. I mean, I couldn't have done this conversation better because the next thing I want to talk about is affordability anyways. And I just wanted to kind of like briefly explain like my situation. So like I first bought property in like 2004. I was 21 years old. And if I look at 2004 and if I look at 2023, from what I can find, it's hard to find like average income per house, and StatsCan doesn't want to give you that information right away. But from what I gather, it's been up from that point in 19 years. It's came up like 30% household income, but the price of housing has come up 70%.
So you cannot keep up?
Yeah, so you can't actually keep up. So my point was also is that I think that we have to look at it in a different way. Like from my time was different, and what I do and moving forward is different. I can't tell the next 21-year-old or 24-year-old to do what I did because I don't think it's going to work.
No.
So just out of curiosity, like, do you guys mind sharing like how you guys got into your first property, how you felt about it? Did you feel a crunch in numbers? Like, what was your feeling around it?
I mean, I went to law school late in life, came back, I was renting in the beaches. I wanted to live in the beaches. So we were forced entering it was like, when was it? 2015, a pretty busy time of bid wars, 2016, 2015. So we were forced to go north beaches, kind of away from the prime area, which was fine for us. It was our first house. But, I remember bidding on some places and in my head, I'm like, oh, this is a great street. But the house was like 12 feet wide. And I told my wife, I'm like, why don't we just buy a condo? Like,
and you're a tall guy, dude.
I'm like most basements I didn't even fit in, right? Like, because a lot of them are low because the subway lines. So, they're old war homes. So I'm like sitting here going, like, I couldn't fit in most basements. I'm like, this isn't worth it to me. Let's just buy a nice condo. And then you'd have 70 people bidding on it. It's like throwing a dart at the board where you're going to land. So. And then we moved another pocket north to like an area. Then we said, we can get a detached house up here. It's by the GO train. We can get downtown in 10 minutes. This makes more sense. It's not prime beaches.
Sure.
So we just moved a little bit away from our area, and then the prices dropped significantly. We had no bid where we got it under ask.
Awesome.
It was an older war house from the 1920s. We had to put some money into it, but then, we sold it 8 years later, moved out to Pickering and did pretty well on it. So
amazing.
That was our story. At the time, it was a crunch being like, oh man, I'm really paying this right now for this house. But luckily it appreciated in that area, and we were on the winning side when we sold. So
makes sense.
Yeah.
Right.
I was fortunate to get into the market back in 2007
Okay.
when I was 22. So I agree where you're coming from. You cannot go and tell a 22-year-old right now to go and buy a house.
Yeah.
The
Doesn't make
price
sense.
at 200,000 at that time, 218,000 compared to the same house. It's almost 900,000 right now.
Yeah, and we talk about the gap in income as well, right?
Income.
Versus price.
I think you're fortunate I was able to get in. Because of I was able to get in so early, I was able to refinance and invest into multiple properties and just keep growing the real estate portfolio. But it's not easy for someone at the same age right now to do the same thing.
And that's what I'm trying to get at too, is like, see the, like I get asked sometimes is like, hey, how did you end up doing it or whatever else? Honestly, I call it stupid luck, because sometimes I've just ended up in the right situation at the right time. And I've just done something stupid, which it turned out to actually working out in my favor. Like the first place I bought, there was 0% chance I should have bought it. Like realistically, like I made $1,200, but I, paid $1,150 for this place. We'll just leave it at that. But, it was a dumb move, but it just kind of worked out in a certain way. But you can't tell somebody to do that right now, because it's not going to work that way.
It's not possible.
So even when you look at like in terms of like investing right now, like I was big on buying rental properties, and I know Varan was too. I think you kind of stay away from that, right?
Don't want to be a landlord.
Yeah, I get that. I get the pain of that. Luckily, we have really good tenants. So, but right now, even that strategy sucks, right? Like I look at saying, hey, how can I like kind of build up more equity? How can I build up more for my future? But it just doesn't make sense. When I was buying these other rental properties, it was like, okay, maybe I would break even on it, or maybe they were cash flowing a couple $100. It's not like I was in for that, but I was in the long picture of like how the price was appreciating, and then I don't have to put so much out of my pocket. Right now, it just almost doesn't make sense. What do you guys gather about like investing moving forward, like as an investment, not as your principal residence?
Want to take that one?
In my opinion, things have changed.
Sure.
Especially with the rates. It's something I never experienced personally.
Yep.
And it's a learning experience.
Sure.
Because you always leverage.
Yeah.
And to the point, and the tenants are also having a tough time, unemployment, a lot of things going on in the economy.
Yeah.
So is it the best investment? It is still the best investment. The portfolio is growing. Will I do it again? Probably no. I will keep what I have,
Sure.
but I will not grow.
That makes sense.
Yeah, I'd say the same thing. I'd say when you're only getting $2,500 in rent, you're paying $3,000 in mortgage costs. It doesn't make sense at this point, right? Unless it's a multi-unit and you get a really smoking deal, and you can fill it with 3 tenants and it's legal.
Yeah.
Then it might make sense if it's cash flow positive. But and you can just hold on until rates come down and keep leveraging that property to buy more. That's what people used to do. They'd buy one, they'd get it tenanted, they'd fix it up. They'd get the rental income off the property up, and then they'd go to Varan to refinance and buy another one with, pretty much tax-free money.
Yep.
But that's not happening anymore.
Correct.
You're not seeing that anymore. So, and the deals just aren't there. People aren't going to give up those properties that are already cash flow positive with low loans on them. Why would they sell them in this bad market? So there's not really great deals unless it's a distress sale.
Yeah.
Power sale situation, right? Or an estate sale or something. And then you're getting usually an older place that's run down. You got to fix it up. So
makes sense.
I'm not seeing a ton of investment properties come across my desk anymore like I used to. I used to see a lot of, multi-units coming across, but not usually. You might get the odd like bungalow with a basement apartment where someone is doing that for affordability. They're moving the main floor as a first-time buyer, rent the basement. You still see that sometimes. Sure. But even those deals, I mean, they're priced at a premium for what you're getting.
Yeah, makes sense.
Because of the reason.
Exactly. Yeah.
So it just doesn't make sense. Like there could be areas where it does make sense, but like for the most part, like where we were going and buying like these townhouses and renting them out, single townhouses and renting them out, like I don't think that strategy is a good strategy moving forward anymore.
Maybe out of province.
Yeah, like maybe Alberta. I don't want to like really vouch for it, but like maybe
Alberta
or something like that might work, and especially because they have a better landlord-tenant rules and stuff like that.
Yeah, no, I've read articles saying that's the good pocket.
Yeah.
To invest Alberta, it's good pricing.
Cool.
Yeah.
Awesome. All right, guys. Any final thoughts about 2025?
Wish everyone all the best.
Yeah.
Yeah. Hope it's a good year for everyone.
Sounds good.
Yeah.
Thanks so much, guys, for being on the podcast. I really appreciate it. We're going to put both of these guys' information on our screen, and feel free to contact them for your lawyer needs and mortgage needs.
Thank you.
Until next time, guys, remember one thing. Get Cabani. Get sold.
Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold.